Hello, entrepreneurs. Joe DeChara, CPA extraordinaire, coming to you live once again from downtown Bethpage, Long Island, New York, for another amazing episode of How to Win at Business. And I just got back from seeing my family in New Mexico um, on day 57 of 75 Hard. And I am going to be publishing a documentary on my 75 days. I've been filming. It's going to be a surprise. Well, not a surprise anymore. I just decided this. And that's what entrepreneurs do. I'm really an entrepreneur that has a CPA license. My friend Larry Broughton gave me that line, and I'm sticking with it. It's the truth. I love entrepreneurs. I've been making all the same mistakes that everyone makes, that I tell people not to make now, because I already did it. I already did it and learned the hard way. So there's no reason for you to do it. And tonight, what I want to talk about is something I'm going to be talking about a lot in probably the rest of my career. I don't know, for the near future, we're going to be talking about what's the best business structure for you at this time, and without going into, well, you should be an S-corp. No, that nobody should make a decision to just become an S-corp. And part of me feels like that's what people are hearing coming from me. LLCs are great. Sole proprietorships are no, 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 no. We don't do sole proprietorships for uh, four reasons. Okay, if you need a reason, here's the four top reasons not to be classified for tax purposes as a sole proprietor. Number one, sole proprietors get overtaxed. A sole proprietor under the poverty level making $20,000 a year net profit has to pay $3,000 just in self-employment tax. They may not pay any income tax, but they're going to pay self-employment tax. So even people, let's say they make 12,000. Believe it or not, there's a lot of people out there that's what they make in their business. I believe, no, I think the cutoff for individuals is 10,000. Let's say they make 10,000. They're going to pay $1,500 in self-employment tax, and they probably qualify for the earned income credit. So they're going to get an earned income credit because they're below the poverty level, but they still got to pay FICA tax. So sole proprietors are overtaxed. And it's not just the FICA tax. You got to pay income tax on top of, if you're beyond the standard deduction. Another little known fact is that sole proprietors get audited more than corporations and partnerships. Well, there's probably not that many partnerships around anyway. There used to be more partnerships, but since they came up with LLCs are a lot better than just a plain old partnership, because at least you get the legal protection. But the fact is that it comes down to two choices, really. You could be a smart aleck and say, oh, you can be a limited partnership, you can be this. No, when it comes to running a business, you really have two choices when it comes to a legal business structure. Three choices, but we're throwing out sole proprietor because that's not even a choice. You're a sole proprietor whether you like it or not. If you're doing anything to try to make money, I don't care if you're mowing lawns. If you're a teenager and you made $1 million mowing lawns, guess what? The IRS is coming after you. You're a sole proprietor. You have to mow a lot of lawns, or you just find one person that can pay you $1 million to mow their lawn. But that kid, I would have incorporated and made an S-corp and give him a salary. You know, you're supposed to take a salary, but how much does a kid need to live on? I would just pay income taxes pay payroll taxes on a small salary, let's say 100 grand, and take the 900 grand that's left over as a distribution and just pay income taxes on it. Why do we have to pay more payroll taxes? That doesn't make any sense. But that's getting off the subject. So left with two choices. You can either be an LLC, limited liability company, or a corporation. Now, the corporation, there's a corporation, and then there's a subchapter S corporation. That means it's a part of the Internal Revenue Code that says, for tax purposes, we're going to take this regular corporations pay taxes. Believe it or not, most of them, that's the way it doesn't mean, that they're going to pay taxes, because they might be doing some complicated tax strategies, but that's neither here nor there. I don't even know why you brought it up, but the fact is that, so you could be a corporation and then tell the IRS, hey, I want to be an S-corp, which eliminates the double taxation. Now, not everybody can be an S-corp, okay? You got to be a U.S. citizen. You can't have more than 100 shareholders, and whatever the restrictions are, okay? But that's your option: a corporation, S-corp, or an LLC. So now we come down to, how do you decide? Am I going to be an LLC? Am I going to be a corporation? They both basically cost the same amount to set up at the state level. Okay. Let's say it's $125, let's say, to set up a corporation or an LLC. Now, in some states, like New York State, you have to actually publish the LLC. In New York State, you have to publish in a daily, I think, and a weekly. And that just means taking out a classified ad saying, we opened up an LLC, and you could see that in the legal notices in any newspaper. And so sometimes the LLC actually costs a little bit more money than a corporation. Now, the issue, the main issue for anybody starting a small business. Now, keep in mind, when I talk about S-corps, when I am specifically talking to single owner entities, single owner businesses that do not have partners, they don't have any other shareholders. So it eliminates the whole it's complicated issue, because it really only gets complicated when you bring partners or shareholders in. That's when it gets complicated, because now you really got to have everything documented. If you're a corporation, you're supposed to have minutes, you're supposed to have an annual board of directors meetings, and yeah, that could get complicated. But when it comes to a single owner, whether it's an LLC or a corporation, I mean, let's face it, folks. If, I have a corporation, I have meetings with myself every day. Some of them are documented. I have documentations like this. I have credit cards, and I've signed for those. There's corporate resolutions. Now, I'm going to need that documentation. Number one, I'm not going to sue myself. If somebody wanted to sue me and get to me personally, they would have to say that I am not actually operating as a corporation. I what they call an alter ego. And that could happen with an LLC also, because you're supposed to follow the corporate rules, and that the corporate rules are made at the state level. Now, I know from my IRS auditing days, that there's a lot of different ways to document stuff. Okay, you could have a formal board of directors meetings, and that's probably the best way to do it. But if you're on your own, I mean, let's cut out all the nonsense. I'll have my board of directors meeting on this post-it. I'll date it and I'll put it in my corporate records. Okay, and I'm not uh, like putting this lightly. I don't mean to minimize the importance of operating as a legal entity. In other words, once you're not being a sole proprietor is easy. It's you. You're the business, literally. I mean, you can get a DBA and a tax ID number, but as far as the law is concerned and the IRS, your business gets reported on your personal return. So you are the business. When you're a separate entity, either an LLC or a corporation, well, I'm not sure about LLCs, but corporations are actually treated like people in court. So that's when you hear that corporations can get indicted for fraud. They can be fined, so corporations can have legal problems besides the shareholders. But again, getting back to, is it complicated? Is it simple? For me, it's simple because I've been doing this 40 years. I've done it thousands of times, maybe even tens of thousands of times. I don't know. I lost track. When you get to be as old as me, you can start losing track of things. And that's why I wanted to mention, I haven't even been following if anybody's watching, and I don't know if you are, but you can give me a hashtag live if you're live, a hashtag replay. If you have any questions, please post them in the chat box and I will get back to you. The great thing about Facebook is that I get notified when there's a comment, and it actually boosts my ego. And another thing that boosts my ego is when you go to Time with Joe and you book a free chat with me to talk about what kind of entity you should be. So let's get back to the choices and how are you going to choose. So now okay, I've narrowed it down. You are a single owner entity. This is an active trade or business. Now that means you're a carpenter, you're a plumber, you're an auto mechanic, you own a store, you're a wholesaler, you're a coach. Active means that you are actively working in this business to make a profit. Okay. In that case, assuming that there's no other businesses, this is the only business that you're running right now. You don't have another corporation, you don't have another S-corp, you don't have an LLC. The best way to be organized is as a corporation. Hands down. And I might be, putting myself out there, but I would bet that anybody that's made any amount of money and has a tax professional advising them, more than likely has an S-corp. Everyone that I've spoken to that aren't clients of mine that are successful all have an S-corp. Okay, now some of them might have an LLC that's being taxed as an S-corp, and that's another story because with an LLC, the IRS does not recognize LLCs. That's the thing. They have what they call default classifications, and that's why if you're a single member LLC, you are taxed as a sole proprietor. And now we go back to you're overtaxed, you're over audited. I forgot to add the other two. You get no respect. Sole proprietors get no respect from the business community. Okay, that's the truth. You go into a bank, you're getting a personal loan, not a business loan. You try to get insurance for the business. It's like they want to see your personal history. You want to go for a business line of credit? No, you're getting a personal. They might put it in the business name, but you're signing personally. And the fourth reason is legal. You don't want when you're a sole proprietor, you have no legal protection, which you could take care of with an LLC. But again, the LLC is not going to do anything for you for tax purposes, unless you tell the IRS that you don't want to be what they want you to be. You want to be what you want to be because you have a good accountant and he or she told you that you should not be taxed as a sole proprietor. Okay, so getting back to now, it's you. You have only one business. It's active, and I'll tell you what's not active, because now if it's not active, it's called passive. People love passive income. And things like affiliate fees are not passive. That's still an active business. You're actively trying to generate revenue. They call it passive income because supposedly you're not doing anything. The truth is you've done a lot. But the truth is that we're talking about passive as the IRS defines it. And the biggest passive activity that's out there is real estate. So if you rent real estate, if you're a real estate operator, and some real estate businesses are actually active trader businesses. Like if you have a real estate management company, that's an active business. You're not leasing, you're not renting real estate. Real estate rentals are considered passive activities. Now, what's the difference? Well, the difference is that net profits from real estate rentals are not subject to self-employment taxes. So if you put an entrepreneur, and let's say they're both entrepreneurs. One of them owns a building and gets rent. The other one has an ice cream parlor. They both make 20 grand. Okay. The ice cream man is going to pay $3,000 in self-employment tax, and the building guy pays no self-employment tax. Why is that? Well, that's the way the tax laws are written. Well, who writes the tax laws? The Congress, and who is Congress? They're a bunch of rich people that invest in real estate. This goes back years and years ago. So the investors, the people that have money that can invest in real estate, well, they get better tax treatment. And that's by design. So if you want to pay less in taxes, like if you're complaining about rich people don't pay enough taxes, well, then you could start doing the things that they do, the things that wealthy people do, because there's no law against using their tax strategies. They're using the laws. Okay, they're using entities, and it starts with one s-corp. Now, let's say you never become rich and famous. That's okay. But from a tax standpoint, you are going to be far and away much better off as a corporation or as an s-corp. They're both corps. One pays taxes, the other one doesn't. And the difference is, okay, so here's if you're losing money in the beginning and you have no tax liability, you just want to be a C-corp. You don't want to be an S-corp. You want to preserve those tax benefits. And if you want to go into detail about what I'm talking about, just go to timewithjoe.com, and I will be glad to explain it to you. Now, also, you can go to mastermindwithjoe.com or mastermindwithjoedechara.com and join us for Jeopardy. We have, it's not Jeopardy, it's Jeopardy. And we play that every week. It's a learning game. We learn about business. We help each other. And the bottom line is we have fun and we learn about business, and everybody's happy when it's over. So that's one of my stories. I'm sticking with it. God bless. I will see you again tomorrow with another exciting version of how you can win at business when you choose the right entity. Thank you. Good.